Good morning from Amsterdam. Thank you so much. I'm honored because today we have Kavita Sinha. I hope I'm pronouncing that correctly, the director of the private sector facility of the Green Climate Fund, which, as far as I know, is one of the largest funders of the green energy transition. But for those that are not familiar with GCF and yourself, I prefer to have the interviewee basically tell their own story. So if you could briefly say who you are, what is GCF, what is your background, and going forward, what the big purpose is. You said that would be really helpful. And Kavita, thank you so much for doing this.
Thank you, Robert, for having us on this platform. I'm really, really excited to be talking to you today. Greetings from Songdo in South Korea, which is our host country. So it is afternoon for us. This is really exciting to talk about GCF's work. We are the world's largest dedicated climate fund. And our work spans all developing countries who are in need. We work both in financing the country's mitigation requirements as well as the adaptation requirements. So far, we have funded over 300 projects, and GCF's own capital in this is over $18 billion. A third of that goes towards private sector, so $6 billion is a committed capital from GCF for the private sector, and the total portfolio that this has enabled is over $30 billion. My name is Kavita Sinha. I'm the director and the head of this private sector facility that I just mentioned. How I came about this role and my background, it's kind of a little interesting. I grew up in India, as my name and the way I look might let people know, in one of the poorest provinces, the state of Orissa. It's an eastern state, frequently prone to flooding, tsunamis, and cyclones. And I saw poverty at my doorstep. We were not poor, but we saw poverty at our doorstep because of these natural calamities. There was, on one hand, as I said, tsunami flooding. On the other hand, some districts had severe droughts. The variability was severe. The country is big. Normally, countries are bigger, and people on the ground suffering the most did not have access to the government or had the time to wait for the government when things went bad. What they depended on mostly was the ingenuity of the local private sector, entrepreneurial spirit to solve problems, to come together as communities to solve problems. And we were part of those communities. I saw genuinely how private sector who could do good to unleash creativity and be able to make solutions that was really solving the pain points of that particular district. So the private sector that was closest to the problems was the most ingenious in solving these problems. And that sparked an interest in my study and background, and ended up studying chemical engineering, looking at, as you said, the energy systems, which underpins all development. And in countries which are not developed as much as others, they having access to good quality electricity was almost like having access to luxury. So growing up, that became a part of my study and career. But the thesis that remained core to my career choices was, how can I use the opportunity to bring private capital as well as ingenuity to help companies make profit as well as solve big problems? And as you know, many private sector have done just that. In India itself, Ratan Tata, who was my great inspiration, has done quite a lot of that. And long story short, 35 years plus in a variety of roles, including in senior leadership role in blended finance and structures. I've been with GCF for now 5 years, and it's been an exciting journey. GCF is, I think, one of the first 21st century development finance institution
Hmm.
with a very unique governing system where there are equal number of representatives on our board from the recipient countries as well as the donor countries. So there is the needs of the people built into our governance from start. And I had spent, before coming to GCF, several years with Bay Area, disruptive companies who were disrupting the existing market for a variety of industries, including utilities and cities and transport. And when I got the opportunity to come to GCF, I thought, wow, this is a brilliant opportunity for an organization that was disrupting finance on bringing the power of private sector and creativity. So here I am.
And just to be clear, does GCF fund government funds, direct deals, or is it grant? Is it VC, or is it everything?
A bit of all. So the Green Climate Fund works with the countries, the eligible countries, and the countries have designated somebody called the Nationally Designated Authority, who are
Mhm.
our counterparts, but they're not just our counterparts for receiving our funding. They are our counterparts acting as a window into that country's needs to be able to bring together what the country's biggest priorities are, and then we sit together to decide where would the most impact, most efficient and effective impact be made through public sector versus where it would be the best to do it through the private sector. And that's how then we find the opportunities. We have another layer of partnerships through what we call essentially accredited entities who are our financial intermediaries who have been qualified to work with
Ah,
us. They meet our standards, they have the right fiduciary responsibilities, and they are mission aligned with us, of course. And so these partners and our countries come together, then we decide on where to fund. We do
and
not directly provide
mm,
investment into a company, but through these
ah,
accredited entities, we provide. So they, our recipients could be private equity funds,
okay.
venture funds, or large scale project. For example, we did that in Barbados, a 24/7 dispatchable solar project supported by battery and a hydrolyzer. So it could be a project, but the money will go through one of our accredited financial intermediaries.
So they're kind of the filter, the gatekeeper who cleans the deal up, packages it right, brings it to you. And what would be the average size of the funding that GCF provides? It must be quite a large range.
Absolutely right. Because our accredited partners, over 100 of them, they span the entire range from state-owned enterprises, private sector, commercial investment banks, to some NGOs. Depending on the country and the needs that you're trying to solve and the problem that you're trying to solve, the right partner then becomes available. So the range of projects, size of GCF's investment varies quite a bit. I think we've done projects as small as $5 to $10 million of GCF commitment to as large as 200 to $300 million of GCF commitment. Of course, the problem and the mobilization that happens for all of these different ranges varies. In the private sector side, we typically have larger co-financing and it is a larger ticket size. On the public sector size, potentially ticket sizes could be lower, but then it also depends on the problem you're trying to solve.
There was recently an absolutely, from my eyes, earth-shattering news about how quickly Pakistan installed solar. But I mean, at a massive scale, I was hearing figures that 50% of the total energy output was installed in like a year or two by individuals over there. Obviously, cheap solar panels, but the price of energy went up. Um, is that story true?
I would defer to more, journalists, journalists who will do the better investigation to that, whether it's true or not. However, I will say that we have funded JS Bank, one of the commercial banks in Pakistan, which has mobilized its own capital for funding the rooftop solar and commercial and industrial rooftop, where our money stands as a guarantee, just in case somebody doesn't pay off, right? So we are using a capital in very judicious manner so that countries that have access to capital but aren't investing in these proven technologies because of some risk of failure of return, then we can provide guarantees. So that's the beauty of the flexibility of instruments that we can provide. Since our goal is climate impact, we look at the problem and the solution from a climate angle and then find the best way to finance it rather than pushing out financial products for the market.
Do you, you have a sizable portfolio. I mean, it's quite a lot of money. Is it enough for you? Would you like to have, I don't know, two, three, four, five times as much? Everybody's complaining that not enough money is going into climate solutions and particularly energy transition.
You're right. The demand for GCF's capital far outstrips the supply of
Ah,
capital that.
okay.
Typically, we are committing between $2 to $3 billion a year currently.
Oof.
Our ambition is to become a $50 billion fund by 2030. And that means we have to increase our fundraising and bring in the types of capital that we need to be able to meet the needs of the people. You might have heard numbers of between $1.4 trillion to $3 trillion needed for energy transition alone, right? So of this, a sizable chunk will be in the developing countries, some of which are just beginning their growth trajectory. So that supply of the capital currently doesn't match that, obviously. And hence, I believe the creativity of the private sector and the ability for us to right size the solutions and to be able to find the best way to catalyze those large flow using our scarce capital is so very, very critical at this time.
There's, at least according to UBS, there's 5 times more wealth than there is global GDP. A lot is in real estate, so there's lots of money. Is it possible for family offices or institutional investors to invest or create a mechanism to support GCF, or is it always government money?
No, actually, in the private sector work that I do and oversee, uh, several of the funds that we have helped set up with our anchoring or our de-risking layer at the bottom, high net worth individuals or family offices and foundations have come in as well because
Oh,
they all,
okay.
yeah. For example, one proposal that I would like you and your audience to keep an eye on for very good news very shortly is called the hardest to reach. That,
Mhm.
as the name signifies, it is financing, trying to build commercial models to finance energy access to those who have the greatest energy poverty. So, below what the UN sets the standard for what is called the energy poverty lines, people below that. Up until now, it was the government grants that was financing this, but this is not sustainable with governments mostly in moving backwards from their donor assistance. And so this is a curated model which will help provide the local entrepreneurs and entrepreneurs from neighboring countries to set up the supply chains to be able to do off-grid, energy access projects. This proposal it brings together about, I'm told, more than 20 funders in different levels in partnership to provide a commercial stack for investment. So this is a blended finance vehicle. So we do provide such curated opportunity where investors of different stripes, if you will, can come together with different risk appetite and risk return appetites, as well as family offices and pure philanthropy can come together to
Mm.
deliver on an impact.
And how can, I mean, it's if you're we know many, many family offices. Some
Hmm.
are very low profile. They don't have a website. They're just kind of get on with it. How do they know about this, or how do they engage with this? Do they just let me speak to Kavita? I need to put some money there. Is there a mechanism for them, or does it all have to go through local intermediaries?
Well, as I said, we do have some funds already set up. There are funds for different impact areas. And, if the officers, the best would be not necessarily, hello, Kavita, but the best would be to get in touch with GCF. And, I'm happy to provide links to the right
Oh, grateful.
address, which, if you could post it on your
I will.
curated
I will.
to people, they can get in touch with us and we can help them play the role of honest broker and help them direct to the area of interest and see what we can do. Also like to mention that we have our executive director has set up a new department exactly to answer that question. It's called the
Ah,
Department for Strategic Investment Partnerships and Co-Investment. We know that outside of our own network of funders and development finance institutions, there's a whole body of potentially interested investors in impact who we are not able to reach. And this would be a great opportunity to bring them into a fold, at
yeah.
least through this discussion with you, for them to get to know that these opportunities exist. And then hopefully, if one or two folks can then get interested in what we're doing to co-finance, that would be great. In
And
addition,
I'm sorry,
In
go ahead.
addition, we are hosting the GPIC, the GCF's Private Investment Conference in Abu Dhabi in 8th and 9th of October. That would be a great opportunity. Happy for after this conversation for my team to send the link to that. So if your
Please
investors
do.
are interested, that would be another spot to meet with my team and other GCF members and then explore opportunities. We will have some of our partners, financial intermediaries, and investee companies who are benefiting from us uh, will be present. There's a great opportunity to network as well as to listen to real life impact stories directly.
Are the vast majority of the portfolio, are these investments done at market rate return or below market rate return, or is a portion grants?
Well, a very good question. GCFs on the public sector side, large our capital is highly concessional. It is long term with grace period. It can be grant, reimbursable grant, or loans. On the private sector side, our first preference is to go for impact. So we
Right.
are an impact fund. We don't have a hurdle rate to meet, but we don't want to leave concessionality on the table to distort market. So the private sector policy allows us to provide the amount of concessionality that is needed to help one for the buyers on the ground to have that particular impact or service at an affordable rate and for the investor to meet their risk adjusted return requirements. So we tailor our concessionality and patient capital to the needs as a result of our policy. So we don't, again, coming back to it, we are an impact fund. On the private sector side, we do provide first loss equity or a guarantee or a concessional loan or subordinated loan, but all of these are anchored in effectiveness of the impact. So we will do an assessment from an impact point of view.
And can investors, like a family office we were talking about that might turn, can they say, well, I'm really interested in this particular project rather than the fund? Can they target or invest directly into specific projects?
They could, but we would put them in touch with our partners who are managing that particular fund or the underlying project. And we would, as I said, make the introductions for them to then explore that
Okay.
opportunity directly.
Okay. And the we've been TBLI has been working, 25 years to try to change the financial system so it works for all stakeholders. And I always got very frustrated that everyone looked at climate as a sacrifice, and they never looked at it at resilience. Do you still have that conversation about, we're not talking about charity and we're not talking about sacrifice, we're talking about resilience?
I would say it is changing slowly, but not fast enough.
Okay.
For folks who have started to invest with us, let me step back a little bit. For insurance companies, they are
Yeah.
seeing the impact already. So,
Okay.
the costs of the premiums for insurance in areas which are seeing a lot of climate related disasters have changed. And in order to make those assets insurable again, you have to build resilience into it. So for some part of the financial system, it's a current reality. It's no more a future projection. However, a lot of, as you said, folks who are sitting on capital still do not see the risk that their current assets are currently already at because of the climate challenge. So our messaging has been a climate investment anywhere is a climate investment at home. Because if you're reducing the risk of climate change further by reducing emissions anywhere in the globe, you're benefiting everybody. And two, if you're building resilience, then you are helping create a more insurable asset. You're creating more stability, you're creating more jobs, and you're helping reduce poverty and hunger. So this threat multiplier, which climate is, allows for a greater global system with greater stability. So again, to your point, what you have hit upon is the right message. An investment in resilience and an investment in climate anywhere in the world is an investment at home.
And you only target emerging markets, correct? Not no developed markets.
Yes, correct. Our charter and our mandate is to invest only in the developing countries, invest and finance developing country requirements for meeting their needs for climate mitigation and adaptation.
And do you have any facility within GCF that does, let's say, early stage technology and energy? I mean, there's a lot of things happening there. There's a lot of, innovation, but some are very early stage, and they're not a big infrastructure project to decarbonize, I don't know, hydro in Laos or that. There's lots going on. Does GCF have a vehicle for supporting those activities?
We do. We have, but it's not a big part of our,
No, I
you
understand.
know, of our portfolio currently, but we do have specific opportunities. One Latin America and Caribbean, it's an incubation. It's called the Catalyst Project. Where we worked with GIZ as our partner, the
Oh,
German
okay.
Development Group, which is set up along with the Mexican Technology Institution, an incubation center to really look at early stage startup ecosystem for the mitigation side. We have a similar setup in Western Africa with GIZ and a local institute there. We have another one which is both an incubator plus early stage venture investment in Southeast Asia through the Korean Development Bank as our partner. And we funded a venture fund in India. So we have, out of this big 300 project portfolio, we have few curated opportunities for early stage investments.
Can you give, I'm sure you've done hundreds and hundreds and maybe thousands of projects. Can you give a couple of innovative investment projects that GCF has supported, which I'm sure most people don't know about, because I mean, you do a lot of things, um, to give a kind of a palette of the types of different things that you've done. I think that would be really helpful for people to better understand.
That's an excellent opportunity to showcase GCF's breadth of work that we've done. I spoke about the venture and incubation, which is one end of our smaller work. And then I spoke about the hardest to reach, which is a very, very difficult area to bring in commercial capital. The other big platforms that we have done, we have worked with the Macquarie Asset Management Group
Mm.
in India to create a large scale platform, $1.5 billion platform
Oh,
for
wow.
e-mobility in India, where our $200 million is matched by their capital. And then they're raising capital from the local market as well as overseas market for this platform, looking at fleet conversions for bus
Mm.
and truck fleets, looking at vehicle conversion and setting up the infrastructure for electric charging, which we believe will also benefit the rest of the society. We've also done something very innovative called the Green Guarantee Company, where we took a direct equity investment along with our partners, the UK government and others, to set up a new financial institution, which is a dedicated climate guarantee company, which is called the Green Guarantee Company, which has been registered and is operational out of London. What this one will do is for any developing country projects or bond issuances or private loan issuances from which needs credit enhancement so that they can get access to cheaper, longer term capital from developed market. GGC, the Green Guarantee Company, will issue a guarantee to credit enhance these bonds and others. So it will help countries in the developing arena to move away from donor dependency and then create a pure private sector solution. So that's another type of opportunity. And then in the most recent board in July that GCF approved the Global Green Guarantee Platform, GGBI, where GCF's 200 million euro contribution, again as a first loss equity, is de-risking a $3 billion platform for bond issuances by developing countries for climate, of which, because of our participation, 7 sub-Saharan Africa could be part of this, and
Mm.
3 other developing countries, so 10 of them. will receive at least 600 million because of our 200 million contribution. But the overall platform for developing country is a $3 billion platform for bonds dedicated to climate and for green investment. So I think these are the range of things that we do,
Wow.
from enabling money market movements to setting up new institutions, focusing at incubation and venture, plus looking at new business models for hardest to solve difficult problems.
Has any large institutional investor uh, provided distribution capability for your products?
Uh, if your question is about whether we have partners or agents who develop pipeline
Mm.
for us to bring us good opportunities, we don't have agents as such, but we do partner with other like-minded organizations for curated pipeline,
Ah.
and that helps us. However, even though the entry into a pipeline can be through multiple sources, they all go through the same process once they enter the GCF's approved process for assessment and due diligence. As I said, we are a climate first organization.
Mhm.
So they do have to pass through alignment with our climate impact requirements, countries' ownership requirements, and so on and so forth, before we would put capital into it.
From the because you're a climate fund, what is the percentage of all the investments in vehicles and guarantees on energy as compared to, I don't know, agriculture or mobility or infra?
I would say roughly about 25% is on the renewable energy
Oh.
generation and energy access. We do, and if you look at transport and building efficiency and others together, it'll be probably around 33%. GCF is among the only multilateral institution which has taken on a mandate to do both 50% adaptation and resilience and 50% mitigation. A large part of the financial ecosystem focuses their effort on the mitigation, largely renewable energy. But we've been able to diversify that and look at curated opportunity because of our unique mandate. And what excites me the most is that we are creating market knowledge by using our high risk patient capital in a manner that then allows others to learn from us. If it fails, we take the hit. If it's
Mm.
successful, then it enables others to follow behind us.
And do you also provide funding in what form? I know, because I mean, you do a lot of different things in public transport or decarbonization through public transport.
Our public sector partners do that. We have one project, for example, where we are supporting in Karachi a bus rapid transit system where they were using, I think, biomass waste to convert it into clean fuel that's being used for that. We've also financed on the public sector side Costa Rica's, light rail transit system. So we do look at curated opportunities. Again, on the public sector side, it more directly comes from the government as what they need for this. On the private sector side, it's a joint effort for the governments to identify needs and for us to curate through our private sector partners the best opportunities for creating the best impact.
And you're doing a big event, as you mentioned, in Abu Dhabi in October. Specifically, is it mainly to get Gulf funders interested in co-investing, or is it just to raise the profile, or are you, because you won't invest in that area, that's not really an emerging market. Why specifically Abu Dhabi? I mean, I'm sure they invited you, and it's nice to get invited.
Well, we do our GPIC, the GCF Private Investment Conference, once every 2 years, and we look at finding the right places where we could convene existing partners. As I said, we work across Latin America, Africa, Eastern Europe, Central Asia, and Asia Pacific. So the narrow band of countries that can attract people from all over and be centrally located. We did the previous one in 2023 in Nairobi, Kenya, and this one is in Abu Dhabi. So part of it is logistics, but partly also because UAE is also looking at opportunities for us. There is a large conference on nature conservancy by the IUCN So there is some opportunities to bring together different groups of investors. Also for us, GPIC is both a showcase of what we have done and an opportunity for our current partners to meet and attract new partners, because we do need more, both in terms of ambition and capital, and enable a partnership against work that is already being done to work that can be potentially done. So it's a combination. We are hoping new investors will come in through this event. It's not specifically targeting only the Gulf country investors. It's a global event. The venue is Abu Dhabi. It will enable our partners from different parts to come together there.
Is there a particular region or continent where the investment that GCF does provides more bang for your buck? I mean, doing something in Africa, will it lead to much higher returns, in the climate side than Southeast Asia or in Latin America? Does it make a difference, or are they all kind of equally impactful?
Well, GCF's mandate requires us to have a regional balance in how we use our
Ah,
capital.
okay.
So we are mandated for that, achieving that balance. Having said that, in Africa, there's a greater need for looking at the opportunities for green from start, because a lot of African countries are starting their development journey quite just now. And so there's an opportunity to not make the same mistakes as others have made and to go green from start. So there's a different opportunity mix in Africa than, for example, in Latin America, where a lot of countries already were hydropowered, so clean from that sense, but because of droughts and others are requiring to find alternative sources. So how can we help them find newer sources without going towards carbon? Then, of course, Asia Pacific, a large part of even though there is a vulnerability to climate in many of the countries, a large part of the world's manufacturing was outsourced to Asia Pacific in the past. So there's a lot of manufacturing related emissions, so which is an opportunity of a different kind for industrial decarbonization, as well as the energy transition. So there, I would say different regions provide different opportunities and they have different needs. And because of a mandate for geographic balance, we are able to find the right opportunities, both for our investors and for the people we serve.
Okay. It's a difficult, maybe politically sensitive question. During the Ukrainian war, energy consumption went down a third at the beginning of the war because prices went up crazy, right? And, nobody died because they put a sweater on and lowered the thermostat, and, et cetera. Do you think that energy is still too cheap um, to if raising the cost? I know it will impact poor people significantly, but is that a mechanism that would also help much more into fuel-free energy, like renewables and solar?
Well, I mean, the transition is a systemic problem.
Okay.
No amount of cheap capital will solve that. So you're right. There are policy barriers that are preventing the right signals for people to change the path. And that is not necessarily only from energy perspective, but from, even from other perspective. If the policies are correct and if the externalities of the climate impact can be valued correctly, whether it's for nature conservation or for clean water or for air, those values, if they can be internalized into our investment decision making, then the investment choices that investors will make will be different. That being said, GCF does have a multiple tools in its kitty to enable countries to be able to look at these systemic barriers and systemic issues. We have something called the country readiness grant support, which the
Mm.
countries can access, and that enables them to look at their country's need in a more holistic manner. We also have what we call implementing partners, curated list of technical advisors who can help these countries then look at their needs, figure out where the most bang for the buck will come. If the bang for the buck comes best from changing a policy that may be preventing, changes in behavior on the consumer buyer side, or changing a policy that is preventing the right type of capital to come in. So that would be the right place for us to then support that country through this mechanism. And if all has been done and there is still capital not flowing because of risk perception of that country, then our de-risking capital to help solve that problem then comes into picture. So I think GCF's unique blend of tools along its entire kitty allows countries and us to offer them a solution that can solve a problem that they face rather than us pushing a product.
And I mean, you probably have an incredible amount of research information about climate risk and infrastructure losses and things like that. Do you find that are other institutional investors that reach out to you to be educated, are they more receptive now than they were 5 years ago?
Uh, I would say based on the number of inquiries, incoming inbound inquiries that we're beginning to get now compared to what we used to 5 years ago when I joined, definitely, yes. There's a lot more people. And I think partly it's GCF. We have a body of work that is behind us that showcases our work. We also have the evidence of climate around us, right? So
Yeah.
I think the combination of these two circumstances then has really made GCF a partner of choice, if you will, for people to reach out to us, whether it's for knowledge, whether it's for finding the right partners in the right countries, or for capital needs.
And does GCF also fund low carbon infrastructure like, I don't know, low carbon cement for building construction, or is it really more about mobility and energy and mitigation or adaptation?
No, we do have, like, one of the examples I could give is the ICRF, Infrastructure Resilient Climate Fund,
Oh,
which is devoted to Africa, where our funding goes to a fund that will then provide equity into these infrastructure projects,
oh,
but not any infrastructure, climate resilient infrastructure. So that's the purpose. The idea is to create a new asset class for investors, which is climate resilient infrastructure. As you know, that asset class doesn't exist because the definitions, the indices, how you measure climate resilience in an infrastructure doesn't exist. So we are hoping not just to create infrastructure investments that can be proof points for investors, but also create the knowledge that is needed for others to make this a standard product or an asset for investment in future.
Um, one of the I don't know if you're familiar with Professor Ratan Lal. He's a professor at Ohio. He's a world expert on soil science. Very humble, quiet guy. And he was saying, with all of his nerdy professors around the world, if we restore the health of the soil and the vegetation, we can draw down 330 gigatons, which dwarfs almost any other thing. But hardly any money goes compared to climate technique, goes into biodiversity, mainly because there's no 10x, there's no IPO and that. Do you think that the value of biodiversity and restoring that will take more center stage? COP30 is coming up, that people will start looking at that as an alternative and actually be compensated because there will be a value on the value of biodiversity.
I'm hoping that will be so because, the nature-based solution is definitely an underinvested area. We have within our team an ecosystem and nature's impact focused team that is looking at curating opportunities for investments with that end goal in mind. However, it's very, very difficult for private sector because the revenue models are very few.
Yeah,
Many of the revenue models depend on carbon sales, which is
yeah.
a very volatile market at this time, and mostly for the private sector, it's really voluntary. So yes, a lot of work needs to be done at COP30 because it's in Belém and in Brazil, which is a big supporter of nature and ecosystem. I'm hoping that that will create the momentum that is needed for this particular area to grow. GCF is committed to this. This is one of our impact and results area that we are working
Oh,
to.
okay. Okay, did you hear about that Mercuria, which is an energy company? They gave $500 million to a nature-based solution fund called Sylvania. Sylvania.earth, to address that. And I agree with you. It's hard for investors that want to have stability and reliability, and will we get our money back, and will it grow at this amount, and will people hit their targets? Even mainstream private equity funds don't always hit their target in many cases. Um, do you anticipate the price of carbon going up significantly after COP 30, and with there's a lot of things going on. I mean, it's hard to predict, but it just seems to me a logical transition that the price of carbon won't go down going forward.
I wouldn't try to gaze into this crystal ball. A lot of it depends on policy and signals from the market. But once, with the Article 6 of the Paris Agreement
Yeah.
now being defined properly, there is a greater opportunity for stability on the market on this point. This has remained unstable because the Article 6 wasn't well defined. Right now, the rules are in place. Governments on the back of it are developing their own rules at home. So I think this market can only improve from here on.
I mean, if you had your magic wand, I mean, because you understand not only the investment side, you also understand the energy science and the systemic. What would you want to have change on the policy side to see that products reflect more their true costs, and that money flows into, well, let's say, more carbon benign or carbon negative investments?
But definitely we need a proper price to carbon. That is one of the biggest policy fix that will help correct, especially on the private sector side, because if all uh, the investors who want to invest in nature positive
Yeah.
aren't able to capture the value of the carbon that they are helping protect or create new sinks for, they aren't at an advantage compared then to those who are actually spoiling that, right? So the level playing field, definitely, that's a big one, I think. The other part also, I think, is the financial systems. Currently, the financial system itself does not value the risk inherent in asset creation that are not climate resilient today.
Mm.
These two probably will send the strongest market signal. The good thing is that the COP 30, the COP presidency will be convening the finance ministers, and this has now become a more urgent discussion even among the central bankers on how do you embed climate considerations in their prudent, regulatory policies. So I think different elements are coming together. I'm very hopeful that this will give the momentum that is needed to move forward.
One of the when I do a lot of talks, everyone is shocked to hear that in Europe, at least, I don't know about in Asia, in Europe, a bicycle has 21 or 25% VAT, and an airline ticket, no VAT, zero, and no tax on kerosene also. Um, and that's an international agreement after World War II. I get that. Um, but on the policy side, it's very hard to get reelected saying, Kavita, the EasyJet price is going up a factor of three, and vote for me. So how do we, I mean, that's such a simple thing to grasp. Why should an airline ticket be so subsidized at this, and a lot of the airlines lose money anyway. So how do you deal with it when people love cheap flights?
I think Europe is taking the lead on it. There are lots of European cities which are now moving towards non-motorized transport, rail transport. And short distance flights
Yeah,
are actually
that's true.
now either being eliminated or being taxed. So I think this will catch on at this time. GCF itself, when we do our appraisal of projects on the transport side, we do take a look at a holistic manner, whether that's going to enable a transition or not. So a lot of our proposals include non-motorized solution as a holistic solution.
One thing that you might not be familiar with, which you'll be enthusiastic. There's a Dutch company that developed solar panel manufacturing that has no PFAS. that has 90% less CO2 emissions in the production because they don't use aluminum, they don't use glass, and they don't use PFAS. They use plastic pellets in an extruder, and then they put a solar cell on that and a coating. So, and it's very light, so it eliminates nine. You don't have to mine bauxite and all of
Mm.
that, which is quite exciting. Things like that. Do you see a lot more innovation in the power generation in low carbon other than because a lot of the traditional solar panels are not being recycled. They are being dumped, in the desert. I know it's people are looking, let's get energy going, but also long term, how can we reduce the emissions in the production side of solar or wind and things like that?
Well, I think you've hit upon something really important. If renewable has to become mainstream, and it is on way to becoming so, other parts of the supply chain, the materials as well as the recycling also have to pull together. And some of our investments are beginning to look at, some of our funds are beginning to look at low carbon materials or new materials. Another element I think that people aren't paying attention right now is how do you then enable some of these successful technologies to scale rapidly
Right.
and displace existing technology, because incumbents always have a familiarity with their customer base. The whole idiom about a known devil versus unknown angel. So the shift in market behavior and purchasing behavior takes time. So it brings back to the issue of long-term stable capital for likes of GCF and others, so that you can help not just create and curate new materials which are low carbon, but also help their journey through policy or whatever be needed so that they can scale up.
Do you ever, does GCF ever engage with pension funds to explore areas of product innovation that they can participate in the work that you're doing?
That's partly one of the reasons why this new department has been set up. The Department for Strategic Investment Partnership and Co-Investments is to look at these big balance sheet holders, pension
Yeah.
funds and funds and others, to look at how we can not just bring them in as opportunistic investors in some of our deals, but also talk strategically on how we can move the needle.
Yeah, because there was a press release put out last year, and we don't have external shareholders, so we can be quite outspoken. I don't have to worry about it, and I follow Groucho Marx's rule of thumb. I don't join any club that would have me as a member. So, and the APG put out a press release, and they said it's an asset management of the Dutch pension fund ABP, and we're going to commit 30 billion to impact investing. So I called the guy and I said, I don't believe you. I've heard this story so many times. But he was very polite and he went through the whole process that we've analyzed. And then they did something totally unique for a pension fund. It's a 600 billion asset manager. They created a 250 million euro fund to fund the decarbonization of Dutch industry with early stage companies doing as little as 3 to 6 million. Might seem like a lot of money to most people, but 3 to 6 million for someone with 600 billion, that's quite unusual. So I think what I found is the ones really doing the most talk the least. And the ones doing the least talk the most. So people kind of gravitate to some announcements, but when you pull up the kimono, you say, "Well, where's the meat over here?"
Well, no comments, I would say, but you.
Yeah, no, but I agree. There are a lot of things going, and as climate bites more and more, um, will it wake up, the insurance industry, which has huge assets and massive losses, which are only covering a very small amount. Um, I'm just concerned that are we moving faster than the music?
We definitely need to do that. The climate models, the predictions of the climate model, which is now some of them is coming true, is that now looks like those models were too conservative because some
Oh,
of the impacts that they were saying would happen a few years later is beginning to happen now. And I am sure that anybody who has put money behind, distributing these risks over several years of time and are seeing these compressed periods of time will be concerned. The opportunity, I believe, GCF and like-minded organization have is to be able to pull these concerned capital owners together in a strategic dialogue and a partnership approach to understand how we can change things at three different levels, right? At the strategy and the thinking level, so that we design things right. At the policy level, so that the environment that can enable these new types of things and new thinking to come together and stay, not just one off. And then at the consumer level, the real creators of goods and services for the economy and the buyers, how do you influence them? I think we need action on all three levels and the ability to pull this as a convener. I think GCF does a good job, but we need scale at this and we need other partners to work together.
you said you're at, I think, 15 billion now in assets, and you want to go to 50. If you more than triple the assets, do you have actually enough pipeline to get, put that money to work relatively quickly?
Well, we have committed 18 billion, a little over
Sorry,
18 billion
18.
now. Yeah. Pipeline is not our issue, believe me.
Oh,
So we have a supply, we have a huge demand for it. It's the supply of the capital. And then what metrics you put to screen this, if it is impact only, or whether it's development only, or whether it's a combination of return and impact, uh, and who are you really de-risking? Are you de-risking the investor only,
right.
and not the balance sheet owner of the creator of goods and service? These are different elements that go on to then make a project bankable or not. And that's where I think the real fun begins, right? So it's not just the pipeline, it's what you want the pipeline to look like to put your shade of capital into it. So at this time, the demand for GCF capital and the pipeline of opportunities we are seeing and can create is far higher than the supply of capital.
And I know it's challenging also being in a global organization like yours. What is your greatest frustration?
Oh, well, the greatest frustration, well, everybody talks about climate as being the most urgent problem and not being able to work on it as urgently as needed. I think for folks who leave families and friends and come to South Korea to make GCF their home, I think
Mm,
this is the source of greatest frustration. We are all committed to solving this problem,
mm.
and we wish that everybody moves at the same speed as what our passions move us.
How can the audience that is listening to this help you?
Raise the voice about the GCF's work, showcase us, ask us questions, partner with us, attend the GPIC, but also talk about the fact that you and I discussed a little while ago. An investment in climate adaptation, resilience, and mitigation anywhere in the world is an investment at home. Investment in climate creates secure jobs and stability. In climate resilience creates secure jobs and stability at one end that is needed for the world to prosper together. And an investment in mitigation anywhere in the world reduces the threat of climate for everyone. So I think this message, if that can be resonated by your audience and your members to their respective networks, as including governments, I think that will be a great help to us.
And you'll provide link, because I mean you've got so many different parts and different funds. It's finding out who do I contact, which department. It's lots of different funds and vehicles and initiatives and new initiatives that probably don't even have a fund or structure yet. So if we can share kind of a map of where to go, here for that. Um, you like what you're doing. You enjoy I can see that.
Of course.
And you want to go faster than the music. I get that, and you have to. It's a multilateral organization with various funding sources. What have you found over the years the most effective way to convince people that climate resilience or climate transition or adapt is a wise, what's a trigger to, get them to accept it? Okay, Kavita, finally someone's talking sensible. Let's do business.
Well, a couple of things that in my experience. One, nothing succeeds like success. So helping take the first risk as GCF's capital was set out to do, to invest in something and showcase that it can work. I think that's something people get excited about. Um, and if one thing succeeds and you have a larger capital coming through, then there are a lot more partners who come behind us on that. The other part, I think, is to be able to find the right opportunities and right problems to solve. On the climate resilience and adaptation side, the aspect of defining what is climate resilience and adaptation so that people can understand. On mitigation, it's fairly easy, as you said.
Yeah.
People think of renewable energy, people think of clean transport. But the equivalent of that for resilience is not very evident,
No.
right? So for us, when we talk to people and we say, oh, this is what we're doing and this is resilience, sometimes we will hear, oh, we've been doing that forever, but we never called it adaptation and resilience, right? So I think creating that knowledge of what constitutes adaptation and resilience in different parts of the world, depending on the different climate threat it is addressing, is something that I think on the mitigation side was a problem 20 years ago. So this body of language, vocabulary for investment is just beginning, and GCF is contributing to that right now. And that's, I think, is improving quite significantly. For every one project, in just 5 years ago, adaptation was a very small component of the private sector,
Mm.
but it is more than a third now. So, the fact that we've done that in 5 years' time means that once you
Wow.
show something works, people come behind you.
I promised your team to to keep it to 60 minutes because they're I didn't want I know you're very busy. Is there anything that we forgot or that I forgot to mention that you want to get across now that you find, oh, this is really important. I wanted to say this.
Thanks for reminding. One thing I do want to say is that it's not just the cheap capital. GCF is a concessional capital provider. GCF takes highest risk. We are patient capital provider. However, what really I'm proud of the work that we do is our highest standards. We have our due diligence on the climate side. I would say climate side is gold standard. We really look at it from a climate first. Two, our environmental and social safeguard policies are really very, very strong. So it's not just do no harm. We actually
Mm.
look to do positive, nature positive, people positive. And then we have a very strong monitoring and verification framework. So starting from ex ante assessment to ex post verification of whether those, we believe this allows serious investors who really don't want to be touched by the greenwashing risk to come into with us. So that I believe is an additionality that GCF brings to the table that others don't. So our knowledge of climate, our capital, plus the way we verify the impacts, I think together make us very, very unique.
Uh, I want to thank you very, very much for your time and for your passion and commitment for doing this heavy lifting. It's farming, it's not hunting. So it takes the time that it needs. There are two things that I just wanted to share that the listeners might enjoy. When we started 25, 20 6 years ago trying to change the financial system so it worked for everyone. I would always get questions from the financial sector. Oh, Robert, this ESG and sustainability is kind of interesting. Do you have research that shows there's no underperformance at worst or outperformance at best? And I stupidly used to send the research because there was lots and lots of research. And then I finally woke up and I had the aha moment and realized that this was not about proof. This was about belief. Because I looked at how much research was done on subprime collateralized debt obligation as a risk. I couldn't find anybody at any serious university, but maybe someone did a paper. But I realized nobody read it and all the money went in. That's when I stopped and I shifted very much to how do I get people from proof to belief, by focusing on self-interest, opportunity, and money flows. And the other thing is, I was talking to a very large Dutch foundation that had 500 million in assets. And the CEO said, I want to start doing sustainable investment and climate investment, and I'm going to make mistakes. So they asked their wealth manager, let's start with an ETF and index to, get to understand it. So the wealth manager said, oh, no, that's a bad idea. You're going to lose lots of money. Let's not do that. So the CEO said, okay, I'll go find some other wealth manager who will do that. And all of a sudden, that wealth manager could do it. And after 5 or 6 years, he came back to me and he said to me, Robert, it's really not that hard to do if you want to do it, but it's really hard to do if you don't want to do it. And I think that's really, the essence of trying to get people. So thank you so much for this. This has been a joy. Let me just stop that. Okay.